Hello everyone, this is Roy. Welcome back to CUMIC Weekly, where we bring you the latest Chinese steel prices and market trends every single week. If you're new here, simply hit the subscribe and like buttons right here. Don't miss out on any future updates. This week, China's steel market moved lower again this week, but the situation is more complicated than the price trend suggests. Demand this week, production is falling, inventories are rising only slightly, and raw material costs are moving lower. So what is really driving the market? And what could it mean for international buyers? Let's look at the key signals. China's steel market is still showing the typical future of the off-season. Compared with last week, apparent steel demand decreased by 121,000 tons. At the same time, total steel inventories increased by half of that. Normally, weaker demand would create much faster inventory growth. However, steel production also declined nearly 20,000 tons, which helped limit the pressure on inventories. With both supply and demand falling, the market is not only facing severe oversupply, however, it also lacks a strong reason to move higher. Now, let's move to the cost side. The second round of coke price reductions has officially taken effect. As a result, production costs for steel mills are moving lower, and cost support for finished steel prices is continuing to weaken. This creates a major concern for the market. Even if steel inventories remain under control, falling raw material prices could still pull finished steel prices lower. Then, how about the macro environment? Globally, inflation risks are increasing because of continued tensions in the Middle East. Energy prices, transportation costs, and the commodity market volatility remains key concerns. Despite these risks, the US Fed kept interest rates unchanged. Meanwhile, in China, the latest government meeting did not release clear signal of economic stimulus. As a result, expectations for recovery in Chinese steel demand remain limited. So overall, China's steel market is expected to remain volatile, with a bearish trend in the short term. Looking ahead, what should the market focus on? There are two key indicators. The first is demand. If construction activity improves and steel consumption begins to recover, prices could stabilize relatively quickly. The second is hot metal output. Hot metal production gives us a useful indication of how actively blast furnaces are operating. If it continues to fall, supply pressure may remain manageable. Well, what's your take on the Chinese steel market? If you enjoyed this video, don't forget to subscribe to our channel and give us a thumbs up. Just hit the subscribe and like buttons right here. See you next week. Bye bye.